in terms of cash inflow under the operating activity, the biggest one, as we talk about, from customers, right? From the customers. So how do we get that? We start with sales number. It's given to you on the where? Income statement. That number was $98,000. But how come we cannot just use that number and move on to next one? Then the cash flow statement will be a lot faster, a lot less pain. I wish that's the case, but this is our core basis, right? So do you remember that we had accounts receivable, beginning balance was 8,000, am I correct? Accounts receivable 8,000, the beginning. This is a during, period concept. This is beginning AR balance. At the end of the year, the AR balance still standing at 9, or actually increased by, right? This is the beginning, this is the ending balance. So there are two approaches, we talked about that. Is it increase or decrease in this case? In this case, increase. So if it's AR increase, AR, what's AR? Accounts receivable. How does that relate to cash? Accounts receivable, how does they impact on cash? Right, it's not good because accounts receivable is not cash, right? Actually, who's cash? We are waiting for customer's cash. Customer didn't pay yet. So increase has negative connotation to cash flow. So you can do, so increase 1,000, you can subtract that. That's one way of doing that. Or the beginning cash $8,000, beginning, before you start the revenue. You add that, and the ending, ending accounts receivable $9,000. You have not collected yet, so subtract that. How about that? So 98, I know it's a mess. 98 plus 8,000 minus 9,000 equal to 97. I'm just reviewing what we did. Okay, that's the timeline, beginning of the period. Receivable balance is 8,000. How come? Why AR balance is 8,000, 19x1 at the beginning? Beginning of x2, I guess. This is the end of x1, beginning of x2. Why 8,000 AR? Because customer didn't. We're still waiting for customers to pay $8,000. So this is not cash. And during the year, what happened? All throughout the year, for 365 days, 12 months, 52 weeks, we recognize credit revenue, 98,000 in total. At the end, $9,000 of receivable has not been collected. Right? $98,000 revenue is also journal entry, please. $98,000 revenue. When you recognize the journal entry was, journal entry has been journal entry revenue. Debit, accounts, receivable, credit, revenue, right? Is this a 1A or 1B? Right? I'm talking about chapter 2 of accounting 1A. Right? So we've been doing that. Right? So do you see that? However, we want to get what? What's the destination? What's our goal? We want to cash received from all our customers during the year. That's 90, that's not 97, that's not, I'm sorry, that's not 98, it is 97. Okay, I repeated what we went over. Alright, so now the biggest item now I'm saying what, cash received or what? No, I'm talking about cash paid, right? To all our vendors and suppliers in order to purchase inventory, right? Cash paid. The 97,000, the the first line we got is cash received. There's a reason why I'm emphasizing this, because I don't want you to confuse the signs, plus minus signs, right? Cash paid. What was the inventory beginning? Beginning inventory, how much?
20,000.
20,000. What's ending inventory?
16,000.
16,000. How much inventory we sold during the year, for entire year?
62,000.
This information is given. This information is given on the balance sheet, year-to-year balance sheet. This information is given as a second line item in the income statement, right? Accounts payable also used in order to buy inventory on credit. Accounts payable is what? What's the account is using for? Accounts payable. To be able to buy inventory on credit, which means, is that good or bad for you? You meaning you are the end company. If you're using accounts payable, is that good or bad? I know you will say accounts payable is liability, it must not good. I understand that, but I'm talking about in relation to cash flow. So if you're utilizing, take advantage of accounts payable, that means you're using other people's cash, you're preserving your cash. Who are other people? Vendors and suppliers who are selling this inventory to you. Right? So that's given. So we're using the same concept. I know I talked about if you're selling pencil, you had the 2 pencils at the beginning, you ended up 3 pencils after 1 year of your sales. 1 year, there's time. During this time, total number of pencils you sold is 10 pencils. You want to find out how much cash you actually paid to those pencil vendors. So first thing, your intuition says, how many pencils did I buy during the year? Before I get to this question, how much cash I had to pay for those pencils that I purchased. So therefore, you will say, can somebody do it? You want me to do it? Gerard, you finished already, right? So, okay, what's the starting point? We take 2 steps. Instead of getting into directly how much total cash paid to our vendors and suppliers, we want to find out how much inventory we had to purchase during the year first. Then we'll find out how much cash we paid, right? So Gerald, please.
I just took cost of goods sold minus the change in inventory.
Okay, so change in inventory is 4,000, right?
Negative.
I know that, but you are not telling me the very important one information. Are we adding or subtracting?
Said negative 4,000.
Subtracting.
That's the, I told you already, the signs. The students tells me the signs makes me nuts. Do I add or do I subtract? 50-50 chance. Right?
Negative 4,000.
Subtract. So 58,000 represents,
Bought.
I know everything's in there too. 58,000 represents
How much did I buy during the
inventory
Purchase.
must have been purchased all throughout the year. Can I say that? How do I know this is a correct? Let's say during the exam you don't feel confident. Did I get it right? Can you check that number?
Yeah.
Yeah. So if this is purchased, how much inventory you have?
20,000.
So what's the total goods available for sales?
58.
16? Does it come out to 62?
No.
This is inventory on hand. Or 78 minus 62, does it come out to 16,000 inventory on hand at the end of the year? Then it gotta be correct.